Are you a high income earner, or do you run a business that's very profitable and you feel like you've outgrown your accountant for financial advice? Because I'm seeing a pattern at the moment of new clients that I've been speaking with that this is happening for them. And I wanted to share with you a couple of examples of some significant differences that we can make as financial planners that your accountant is unable to do for you. I want to be clear, accountants do an amazing job. They are very focused on tax affairs. Generally, they're very focused on business planning, but there's a gap for them when it comes to financial planning. They're not licensed to give you advice around financial products. That could be investments, insurance, shares, property, and all of that sort of thing. They tend to lean into it for a little while, but once you hit a ceiling of complexity in your own financial life, your accountant tends to pull back and focus more on the tax outcomes and where they can get you more tax deductions. The first example for you is some high income earners working with their accountant, doing an amazing job, getting their taxes down, but their combined income is $700,000. So they've maxed out things like super contributions and all other things like that. One thing that we have worked with them on is one of the male, he is paying $50,000 in income insurance premiums, or was, and the conversation with the accountant is more around, oh, that's great, that's a good tax deduction, $50,000, that's awesome for reducing your tax. But the real conversation that needed to be had was, do you have the right insurance? Are you paying too much for your insurance? And does this suit your life anymore? So for this client, we've worked through looking at all of the insurers in the life insurance space, and we have recommended he change his income insurance, and those premiums are now down to $40,000. So a $10,000 actual cash saving. Now, the reality of that is he will pay more tax, but the other reality is he's $10,000 better off in his cash flow, but he will miss out on the $4,750 tax deduction. So it's still a net plus $5,000 win, and the client has the right cover in place. The next example for you to have a think about is if you're a high income business owner or high profitable business owner. The example is this client has paid off his office building within his self-managed super fund. That happened a couple of years ago. He's been accumulating cash in the self-managed super fund bank account from the rent from the office, as well as his regular contributions to get the tax deductions. But he's been flying solo and just buying random shares because his accountant cannot advise him on the best things to do with that money within the self-managed super fund anymore. So look, to add to that, 85% of fund managers don't beat the share market. And for this client, he's certainly not beating the share market index either. He's really like throwing darts at a dartboard. So what we're doing is putting together an investment plan for that money for a regular investment into good quality investments. And he's now got a lot more confidence and clarity, and it's more on autopilot, and he's not responsible for these decisions around hot shares, share tips from mates, talking about it at the pub, or talking about it in his social circles. So it's been a real win for them, and they've got a lot more clarity as mentioned. Look, the other thing for this business owner is the accountant they've got to the stage where the accountant set up a bucket company, but the bucket company still needs to do something with that money. And it's a bit counterintuitive to just put money in there and not do anything with it to keep your tax costs down. So we've just gone through an investment strategy and built out a really good long-term investment strategy that builds wealth within that bucket company for down the track. And we'll work with the accountant on how to keep the taxes low within that bucket company, but ultimately we want a good investing outcome, because if you're going to pay tax down the track and you've made a profit or some growth on those investments, that's a much better outcome than just keeping your tax lower. So if you're looking for a financial planner, please reach out and book in a 15-minute chat with me. I can definitely help you consider on how to grow your wealth whilst keeping in mind keeping your tax payable down, but ultimately building your wealth over time and getting you to the place where you want to be, and having a partner who helps you make decisions in the financial advice space, the investment space, the insurance space, and in the overall planning space, where we can project out where we can get you to in the future. So hope this has helped. Reach out and book in a 15-minute chat via our website.